Hey guys, morning, level 2 here. Alright, we just gonna do a review of yesterday's trading and a trade plan for today. Alright, now it's 7:56 a.m. on the 24th of April, so this trade plan will be for the 24th. Alright, a review got creamed yesterday minus 546, 3 wins in oil, and took some hits on the S&P as we knew if here was in the update. I sold the 24-1 contract and then sold the 30s on two contracts with trailing stops. So took some hits on the S&P and made some profit on the oil. So let's look at what we did and how we had to that. So let's look at slash ES first on the 5-minute chart. We're looking to sell the 30s. I was being aggressive and sold the 24s. We looked to sell the 30s and got broken through right through and hit our stops at 36, well 38, sorry. So 37, 38. So we got stopped out for 350 for one contract, and plus I sold the 24. So that made my loss there. Right, we were looking for the fade on London close exactly at 11:25. You see the initial fade. I got in early, seeing price action and looking at how the trend was forming during the day, during the morning session. We had an early punch at the upside, subtle kick to the upside. We had rollovers, so when you do rollovers, you would have some balancing to do. And we broke right on London close up one of my contracts here, and then we entered a trade to the downside, one single contract with short stop, hard stop to the downsides. So we hit targets at 12:30 p.m. at 66.10. Alright, so let's go to the trade plan for slash E yesterday. Alright, so this is yesterday's value area. We have 0.5 deviation plus value area low plus the node we was looking to sell off of yesterday, which is the most recent high. So we're looking to buy through that. If you look to the daily chart, you would notice something. We are close to all-time highs in the market. Well, 6 months high, sorry, in the market. The S&P may be close to all-time highs right now. If you look on the daily chart on the running contracts, remember futures are different contracts from a running contract. So on the running contracts, you would notice there is a gap to fill right here at 45 and the high is at 58. So what we have on the sell side is just one sell alone, that is at 57. That is based on the deviation. So be very careful, sell one contract at two contract maximum. Look, if you're looking for the buy side, look for a 20 to 22 area to buy on the first instance, and then look to trade if we do see the break through it. Then look for your stops to be beyond the 15 area, which is the value area low. Notice last week we had a tight trading range for the whole week last week. So and then we had rollovers on Friday to Tuesday early, because yesterday was part of rollover with the volume going through, because we had high volume. This morning we are looking at volume and seeing what we're looking at 1.2, well 120, which is very light. Could run back to more or less normal conditions on it. So you can see we took the stairs and came back to the high from I think this was October's high, and we started January off and kicked off the day after Christmas to now on the buy side. So be careful of how we are trying to sell the market. There's a lot of news outside here, and on oil may be volatile. On oil, we looking for to just put your hands in your pocket, look to trade what you see. look at deviation levels from the close yesterday was 37 or 40, so you're looking for a rule of thumb 80-point move on either side from 40 to either buy or sell. So this will put me at 65.30 would be to 40. It would be a good area to buy, and be careful of all-time highs. If you got a breakout, you might not be able to, you may get run through, so look for your London close again to fade the market. I would not advise trading the US Open or the market this morning. There may be some big runs, we could have a lot of outstanding still on the rollover. So let's see where the price takes us and let the market balance for itself first, and then look to find an advantageous position. Most likely, I might look for the yesterday's node also. Again, look for a short position at 66.40 to 50 area with stops at not beyond 70. You just use a 25 pip trailing stop or something, and you should be good. So you're looking for 40 to 50 and use a trailing stop from 70. To trail the market, look for 30-point retracement only. You don't need to catch the whole market, just look to trade small and trade smart. I'll be trading single contracts today. I was a little bit aggressive yesterday, so I paid the price. Trading is something that you just live and learn no matter how old you get or how much experience you have. Now come back from vacation, it doesn't be very nice when you have experiences like that. So my 56.57 would be one contract sell with a trailing stop. Open your brackets, use a soft stop trailing stop. 7.5 to 9 points on either side. So if you're looking at selling the 57s, sell one contract at 57. Use a trailing stop. And if you're looking for 9 points, which I am looking for today, it will be 48. Right, and if you're looking to buy, you'll be buying the 20s or 22s. More than likely, I'll be buying the 20s automatically at one and then adding to the buy side. So what I'm trading today is trade one contract on as like an alert buy, and then trade the second one as receipt. Okay, guys. Hope you had a better trading day than me from yesterday, and trade small, trade smart, and look to trade what you see in the market. Okay, guys. Bye.